Well, we've gotten a lot of questions, a lot of comments on the fact of our last video that we have failed cities into making. A lot of these cities are endangered. Now, we want to expound on that a little bit. I'm going to pick on Chicago a little bit today. But if you've got business, if you've got investments, if you've got your warehouses or your retail stores, you are at risk. Not only are you at risk, but your employees are at risk. Your visitors are at risk. Your customers are at risk. So let's just take a look at this and let's just explore what it is that we're really talking about here. Because what do you think is going to happen? Do you think it's just going to be just fine, that nothing's going to happen? Now, we've talked about the fact that we have problems in cities when we have a very, very good economy. Now, you have to realize, last 20 and 21, 22, these have been pretty good recoveries. I mean, we recovered out of that recession. The economy has been very, very good. Lots of activities. Jobs have been plentiful. And yet we're having social unrest in a lot of these cities. Now, I personally think they're probably being orchestrated by someone. If you look at the kids in Chicago that were running amok, and the city elected officials were not allowing the police to do anything about that. Now, if you live in that city, this is a problem for you. They ran across Chicago's Miracle Mile. The Miracle Mile right on the lake. It's an absolutely stunning, gorgeous setting. And they ran crazy. They went amok, and no one stopped them. But they all had the same face mask on. So someone organized this, and your elected officials did absolutely nothing about that. So let's just talk about this. Now, I've been picking on Chicago. This is my list, but we can add to that. I mean, you can add St. Louis would certainly be something that you need to talk about. Asheville, North Carolina. It's these DAs that are not very anti-criminal. They're a problem for us. So those people that defund the police, well, you're getting what you deserve. But what about us as investors? What about us as business people? What in the world is going to happen to us if you've got your properties and your businesses in these cities or in a city that you are concerned about? Let's just talk about that. Because, Chicago, Walmart is leaving Chicago. So if you've got business in Chicago, are you smarter than Walmart? Walmart's got a lot of money at risk, and they are leaving. This is happening across the country. So a lot of these defund the police places, they're getting their wish, and you just have to know what's going on. Now, on that list, you're going to notice that Baltimore and Detroit were not on that list because I think these are already failed cities. These are cities that have been having problems right through a very good time, and they've failed. Now, this is the Baltimore Inner Harbor District. This is like one of the greatest iconic settings in America, right at the harbor, right downtown. Lots of entertainment, lots of restaurants, a lot of places to go to. Just an absolutely stunningly beautiful area. Look what's going on here. Now, this is looking into the mall. Now, there's a huge, enormous shopping district right there. You can see by looking into it, you can see the reflection of the harbor right behind it. And this is the view looking out of it. It is empty. It's shuttered. There are no more customers coming to it. There's no more stores. There's no more retail. There's no more restaurants. There's no more entertainment because people don't want to go down there. And look at this next one. This is what they're looking at. So look at there's no restaurants. There's nothing. And here's what's happening with San Francisco. Now, I'm going to pick on San Francisco. That they went a big defund the police, and they got what they asked for. Now, Whole Foods put together a flagship store, 60,000 square foot of absolute pure luxury. One of the greatest retail stores in America. Was their showplace. It's 1 year old, just 1 year old, 60,000 square feet. And they're closing it. They're closing it because there's so much crime. They're concerned for their employees, and they're concerned for their customers. But of course, now they're closing. Now they have obligations there, and are willing to just close it and take a loss rather than leave it open. Now that's got to tell you. So if you're anywhere in downtown San Francisco or in the areas, you need to start thinking, what does this do to me, and where can I go? Now look what happened. Now this is in the Union Square area, 2 Nordstrom stores. This is where they got their start. Nordstrom's was a San Francisco retailer just known for its service. And because there's so many problems in the downtown San Francisco, homelessness, drug abuse, crime, theft, assaults, that they're closing down. 2 Nordstrom stores have closed. The Walgreens and the CVS is closed. Office Depot closed. Container Store closed. Anthropologie closed. Saks off Fifth has closed. What do you think is going to happen? Now, look, we've talked about what's happening with some of the office concerns. So let me just go to my next slide and we'll talk about that as well. So look what's happening. Now, prior to the pandemic in 2020, 350 California Street was put on the market for $250 million. Now, obviously, when you had shutdown with the country, that really impacts things. And then they started doing remote work, and there's no one coming to the office buildings. Now, we just got a survey. I may have shared this with you that nationwide, we're talking about occupancy in these towers and these big office buildings at 45% and less. Occupancy of 45% and less. Now, you can't run a business with that. So that means that only 45% of people are coming to work. That means all the retail stores and all the restaurants and all the services that made their living off these people coming to work can't make a living anymore. And plus, if you have 45% occupancy, the building is no longer worth what you paid for. So look what's happening to this. Now, this just closed last week, May 9th, 2023. They were asking $250 million for it in 2020. It just closed for $60 million, a 75% haircut. Now, how do you do business with a 75% haircut? Someone took an enormous loss. And I'm going to tell you, you need to be concerned about this because, I'm going to tell you, when you get to be a baby boomer, hopefully all your properties are free and clear. This is one of our strategies, is to try and get your properties free and clear. But a lot of people are not. A lot of people have leverage. And, if you own a property for 10 or 15 years, maybe you have 50% loan to value, 40% loan to value. If you have problems like this, you can lose absolutely everything in your portfolio. Your entire equity position can be gone, just like this tower, if you are invested in a failed city. So let me go to my very next slide. Let's talk about this. Here's what's going on in Los Angeles. Just to put this into perspective, the U.S. Bank Tower is a landmark in Los Angeles. There is so much vacancy in Los Angeles, it's equal to 30 U.S. Bank Towers being vacant. They have vacancy for 30 bank towers of 20 stories each. Can you imagine 20 stories? You have 30 buildings completely empty. Someone is taking a pretty big loss on that. So, and this is what's going on. We are seeing this a lot. We're talking about looking at the New York Empire survey from the New York Fed. And in 1 month, we've seen manufacturing drop from a positive like 11 or 12 down to a negative 31.8, almost a 41-point drop, and well into negative territory here. Now, I don't know if you can see my cursor on the recording, but I'm going to tell you, when you start going back here to the end of this line that I put in here, that's the great financial crisis. That is at the very end of the great financial crisis. This is just getting started. So how deep is this going to go? So if we're having problems now, when the economy is still fairly good, what's going to happen when we have real problems? Let me go to my next slide and let's just take a look at that. Now, we've had problems with the manufacturing. Here's the result of that. So now the Empire State Building, another iconic building in Manhattan. There's so much vacancy, we can fill 26 Empire State Buildings. They're all vacant. Now, how do you do business? It's destroying Manhattan, of course. When there's no one down there, crime just gets going. And here's what's going on. We have demand destruction. Now, we've been talking about demand destruction for ages. We've been talking about the fact they're going to raise interest rates. They're removing liquidity, so that there's the underwriting, which puts another brake on the economy, as having its results. So This is looking into the PPI. Now, if you remember in November of 2020, I said that we're going to have inflation because you could see it go into the producer price index. Now, I'm going to tell you we're going to have deflation because you can see the producer price index coming out. So I'm going to say in the next 3 to 6 months, we're going to see much lower prices at the producer level. So we're going to have deflation. Now, this can be really good. I mean, who doesn't want food to come down and some finished goods? So this is good news, but it's probably pretty bad for manufacturers. So they geared up for higher prices. They paid higher prices. So when you're manufacturing cars or trucks or airplanes and you start seeing deflate, very, very bad for them. So what's good is a stable economy. Now, that's really, really good. So let me go by the next slide so we can just talk about that. So literally, what do you think is going to happen? What do you think? Now, if you're an investor or if you're a family and this is what you're thinking as to where you're going to be and what you're going to do, you need to make some really tough decisions. Now, I'm going to tell you, I hear this all the time. I'm an investment advisor. And I'm in the real estate business. I am an expert in the real estate investments. There are 3 places in the United States that you can go to: Florida, Texas, or Arizona. Now, I'm going to tell you, I'm here in Phoenix, Arizona. It's probably one of the greatest markets in the world. We have last month we got the employment survey. Texas was down a little bit, not too bad, but down a little bit. Arizona still adding jobs. We just have a job bonanza going here, a decades-long trend. This would be a good place for you to consider. Florida, Texas, and Arizona, certainly not bad either. But we can do a 1031 exchange. So if you say, oh gosh, I've had this for 10 years, I've got $150,000, $300,000, $500,000 in gain, I don't want to pay tax on that. Well, we do an IRC 1031 exchange, and we defer that tax. We can defer it basically forever, and you don't have a taxable event. This is very, very good. You can transfer your investments to another location and not pay any tax on it, not pay any federal tax on it. So this is just a very, very good strategy to do. And we have very good properties here. Now, we have a moratorium on putting new money into the marketplace. But now this is money that's already at risk. It's been seasoned for a long time. If it's at risk in Seattle, it's going to be at risk here in Phoenix. Now, much lesser risk here, because remember that real estate is regional. So when we have people in migration, Maricopa County, where Phoenix and Scottsdale and Peoria and Chandler are at, we're the #1 in-migration county in America. Have been for like years and years and years. People are just moving in droves here. We're going to feel less problems than others are going to be. And I'm going to tell you, these problems that you're experiencing now are in a fairly good economy with people working. What's going to happen when people get desperate? What's going to happen when they start to worry about where they're going to get their job or payments get cut off? So you have an opportunity to do this. I am pleading with you. What do you think is going to happen? And I don't know your situation. You're welcome to call us. We're more than happy to talk to you about this and see what the end product could be. And we'll go ahead and we'll brainstorm with you. We'll decide what's good for you. You're welcome to talk with your spouse and your investment advisors. We can all get on a conference call and decide what's good. Now, I'm going to tell you, you are on your own. No one's going to care what's going to happen to you. You may have to make these decisions. You're going to hear that everything is just fine. We as baby boomers, I get this all the time, because we believe that you should have real estate in your portfolio, but it should not be the only portion that you have in your real estate. You should have other assets like bonds and some stocks, and you want to do your assets according to how much are, what's good. Bonds probably should be whittled down, but real estate is pretty good. But I'm going to tell you, we as baby boomers, we don't have a long term. So when you hear people say, well, you're in it for long term, baby boomers were just not. That's what you're going to hear all the time, that it's going to be okay. You need to make this decision because you are on your own. You're the only one that's going to make this decision for yourself. Now, this is how you can reach me. If you need to talk with me, you're welcome to reach me. We can do all kinds of, we can do a conference call. We can sit together and see what's good for you. My very, very best to you. We do this all the time. If we can help in any way possible, just let us know. Thanks so very much. Bye-bye now.